welcome in our guest Nikhil Rungta, who's the co-chief investment officer of with LIC Mutual Fund. So, sir, firstly to start off with, on a larger basis, on a YTD basis, if you look at Nifty Bank has been continuously underperforming the benchmark. Do you expect? How do you expect the Nifty Bank? What are you seeing into it? Are you seeing the valuations now cheap? Should one also look to increase exposures toward banking space?
Hi, thank you for having me on the show. See, what we believe is banking sector has underperformed, but in terms of earning, that contributes around 40 to 50% of the index. They have underperformed for a reason. Specifically, if you see the deposit garner issues have started in the banking industry. Uh, Next is what we see is the problem with the industry is uh, the mutual funds, the issues which are going on. I mean, RBI claims that the deposits are moving toward mutual fund. The SEBI is saying that the money is flowing into FNO. What we believe is going forward with the falling rate cycle coming into picture, uh, these banks will have to start. We'll start seeing pressure on the margins from these banks. Their asset on the asset side, their yield will start trending down with the fall in the rates. However, on the borrowing side, since they are unable to garner deposits, the rates won't fall enough. So there will be pressure on the margin. But yes, on the other side, valuations are reasonable now. We have started looking at the banks from our own portfolio as well. And from medium to long term, we believe without financial sector, the index will not move much. As of now, in the BFSI segment, what we are bullish on primarily is the non-banks, non-lenders. In the lenders, we are more bullish on the NBFC side. On the BFSI side, we are bullish on the insurance and wealth managers.
So, sir, are you suggesting that all the negatives are still not priced in when it comes to banks specifically?
I will not say that all the negatives are not priced in. What I will say is we don't see positive triggers as of now. So we need to wait and watch. We are definitely watching the space. As soon as we start seeing those green shoots and those positive trigger coming in, we'll start increasing our exposure on the banking sector.
And when it comes to the FMCG space, well, obviously, yes. Over the weekend, the news that has come in that custom duty increase could have an impact on the gross margins if they do not take a price hike. But in the overall scenario, the rural consumption has been picking up. Monsoon has been good. Even we are now seeing a trend moving towards the FMCG. For the last 4 consecutive months, the FMCG index has been continuously gaining. How are you looking at the FMCG space currently? And within the FMCG space, which are those broad categories that look much more interesting and attractive at this point of time?
See, this FMCG, what we believe is the rural has been picking up now. Uh, Early in the first quarter of this calendar year, we saw there was some concern on the FMCG side with rainfall not expected, but your rainfall has also been good. There are signs that rural is picking up. Your two-wheeler over passenger vehicle sales are coming in good. You see the commentary of most of these players, of most of these FMCG players, they are positive on their rural cycle. So what we believe is this urbanization theme, the growth in other sectors, specifically characterized by higher demand for your discretionary goods and services such as electronics, branded clothing, automobile, real estate. These things will continue to basically close the gap between the urban and rural. And on the as of now, what we have seen is your urban consumption were picking up, your rural consumption was not picking up. Now we have seen your rural consumption has also started picking up. So we are bullish on this particular theme, and we have good positions on the FMCG space as well.
Good afternoon, Mr. Rungta. Just Cheryl also joining in the conversation and taking a leaf out of what you actually spoke about, the fact that now you're seeing a good comeback in the rural area as well. And you did allude to the fact that also with the fact that you are seeing good pickup in the rural consumption. You have two-wheelers also that are seeing some benefit. But what's your take coming in on the four-wheeler majors? Because they've hit a rough patch over the last few months. When you talk about the sales have not been as per the expectations. They have issues when you talk about the inventory levels. What's your take on the four-wheeler majors? Do you have a positive view on that segment?
So see, these four-wheeler major issues are also primarily on those segments which are low end. So there also what we have seen is your rising income levels have led to increasing sales of premium vehicles, electric vehicle and luxury cars across the board. In rural India, of course, your two-wheelers and motorcycle continues to be prime mode of transport, but there also we have started seeing the entry of your SUVs and premium cars, which is picking up the space. So what we believe going forward is your rising income levels and also the disposable income which is there in the hands of consumer will continue to lead to premiumization in these products. And if you look at these four wheelers also, they are not seeing much pressure in their premium vehicle segments. They are seeing pressure in their entry level segments, and that we believe is a structural change which is happening in India. And yes, on the four-wheeler side, we had cut down our exposure on the four-wheeler a couple of months back. We just have one or two stocks in our portfolio. Uh, Whenever we start seeing improvement on the four-wheeler side, we'll definitely lap up on those as well.
Well, when it comes to the metal space, with the fall in commodity prices, we have seen a muted performance when it comes to the metal index as well. But do you expect a turnaround for the metal index or the metal segment or sector from current levels?
See, what happens on the metal side is we generally talk about the dollar index. We generally talk about how exactly is the global moving in. But what we generally don't see is, I mean, in earlier cycle, what we see is whenever rate cut started, your metal index have started picking up. But what we forget is the biggest consumer of your metals is also China. And if growth issues crops up in China, uh, we don't see much rise in this metal index, even with the rate cut coming into picture. So we need to keep track and keep watching how the largest economy, how China, they are, how is the growth rate in those countries moving on. So other than that, I don't see much impact there. But yes, on the metal side, we don't see spike coming in a sharp way as we have seen in the earlier rate cut cycles.
Right. So that's the take coming in on metal space. We've covered auto, we've covered FMCG pact as well, but there is one entire segment that we've not touched upon, and that has to be the defensives, so-called defensives as the IT and the pharma pack. What's your take coming in on these sectors, making a good solid comeback, at least with the way how the data has been going on, especially for the pharma companies and the IT also. You've seen some renewed actually vigor in that segment. What's the take coming in on the defensives?
So we are bullish on defensive, at least from short to medium term. We like pharma, we like IT, and we like consumers, FMCG, especially consumer discretionary. Uh, there is a lot more juice remaining there. In fact, the juice has just started. These sectors actually have underperformed significantly in past 3-4 years, and we have started seeing green shoots. On the pharma side, we are bullish more on the CDMO side. On the IT perspective, we believe that the sector have bottomed out now with the US election just round the corner and pickup seen in the BFSI segment. We believe IT will also bounce back. On the FMCG, as we discussed, the rural is bouncing back, so we are bullish on that also. So we have started. In fact, we have went slightly overweight in our portfolio from these sector perspective, and we are bullish on these defensive name from at least short to medium term.
Well, thank you, sir, for joining us and for putting things into perspective. With that, let's.
If you like this video, then like, share and subscribe to ET Now.